In January, we did my annual 31 Days to a More Effective Compliance program where we looked at one thing you could do each day. Well, we're back with the Compliance Tip of the Day. This is the podcast where we bring you daily insights and practical advice on navigating the ever-evolving landscape of compliance requirements. Whether you're a seasoned compliance professional or just starting your journey, my aim in this podcast is to provide you with a bite-sized, actionable tip to help you stay on top of your compliance game. In the chaotic world of 2025 and beyond, compliance will become even more important, and you staying on top of your game will help your company move forward. Yesterday, we looked at assessing internal controls. Today, I would like to spend some time discussing deficiencies that you might determine through an assessment. The illustrative guide spent a fair amount of time discussing deficiencies. Initially, it defined an internal control deficiency as a shortcoming in the component or components and relevant principles that reduces the likelihood of an entity achieving its objectives. It then went on to define major deficiency as one which an internal control deficiency or a combination of deficiencies severely reduces the likelihood that an entity can achieve its objectives. Having a major deficiency is a significant issue because when a major deficiency exists, the organization cannot conclude it has met the requirement for an effective internal control. Moreover, a major deficiency in one component cannot be mitigated to an acceptable level by the presence and functioning of another component. Under a compliance regime, you may be faced with a known or relevant criteria to classify any deficiency. For example, if your written policies do not at a minimum have the categories of policies laid out in the 2020 FCPA Resource Guide 2nd edition, which states the nature and extent of transactions with foreign governments, including the payments to foreign officials, use of third parties, gifts, travel, and entertainment expenses, charitable contributions, and political donations, and facilitating and expediting payments, also formulated in the illustrative guide, such a finding would preclude management from concluding that the entity has met the requirements for the effective internal controls in accordance with the framework. However, if there is no objective criteria to evaluate your company's internal controls, what steps should you take? The illustrative guide says a business senior management with appropriate board oversight may establish objective criteria for the evaluation of internal control deficiencies and for how deficiencies should be reported to those responsible for achieving those objectives, together with the appropriate auditing boundaries set by established law, regulation, standard, or through management exercising its judgment. You can then make a full determination of whether each of the components and relevant principles is present and functioning, and the components are operating together, ultimately concluding on the effectiveness of your internal controls. And now a few words about reporting. The illustrative guide itself has a useful set of templates that can serve as the basis for your reporting results. These are specifically designed to support an assessment of the effectiveness of internal controls, and the document feature is critical in any best practices, anti-corruption or anti-bribery compliance program, no matter what law of the country it's based upon. With the illustrative guide, COSO has given the compliance practitioner a roadmap, a very useful roadmap, to begin an analysis into your company's internal compliance controls. When the SEC or other regulator comes knocking, this is precisely the type of evidence they will be looking for to evaluate if your company has met its obligations under the FCPA's internal control provisions. So what are today's 3 key takeaways? Well, number 1, has any deficiencies taken away the reasonable assurance component of your reporting? 2, benchmark your deficiencies against the hallmarks of an effective compliance program. And finally, when it comes to reporting deficiencies, remember, document, and then document. Thank you, and I hope you'll join us again tomorrow. One of the things that I'm happy to do for you, the compliance profession, is if you have a question or a series of questions you would like some compliance tips on, I'm happy to take any requests that you might want, certainly anonymize them, and give you a quick tip. Either one quick tip or maybe a week's worth of quick tips. So if you have any tips you want about your compliance program, you can shoot me an email at tfox@tfoxlaw.com. This podcast was created and produced with the assistance of AI.